Hey everyone, welcome back to Stock Market Weekly, your 20-minute show catching you up on all of the latest noteworthy moves across financial markets. I'm your host, Evan Medeiros. We publish these shows every Friday, so make sure you are subscribed to the channel. Tune back in on the weekends to make sure you never miss an episode and you're prepared for the week ahead. I hope everybody's doing well out there. It was a challenging week, a bit of a roller coaster week for stocks. And we're going to start off with DeepSeek. DeepSeek, something we're all probably tired of talking about and hearing about at this point, but it is important. We got to talk about it. Monday, really Sunday night futures last weekend into the Monday open. Stocks were in a panic. We had this new model sort of come out of nowhere, this more efficient language model that really sort of challenged the assumptions that Wall Street has been under relative to the AI trade, right? This AI trade that's been underway here, largely led by NVIDIA, a ton of CapEx spending, a ton of build out for power infrastructure, and just a lot of kind of long-term planning and expensive planning to build out these language models. And suddenly, out of left field, an unknown hits the market and basically says, we can do this a lot cheaper and it's open source. Here you go. And markets, of course, kind of shoot first, ask questions later. There's a large sell-off. NVIDIA at the top of the list, but again, right down the stack of the AI trade, basically, where lots of hot money and momentum has been hiding out, was really flushed out on Monday. The buyers sort of came back in, and Wall Street really started to, kind of price in that there's going to be different winners and different beneficiaries to a lower cost, cheaper open source model. Software stocks being really some of the most clear winners here, that there maybe isn't going to have to be so much spend and there isn't so much of a lock-in buy-in on some of these AI tooling, and off we go, markets reclaiming a lot of those losses throughout the week. There's obviously other stories like the Fed out on Wednesday. Not a whole lot changed there. Kind of more of the same, really not changing too much. I think markets are now sort of expecting maybe one or two rate cuts this year. So kind of status quo. We didn't get a whole lot of new information out of the Fed. We had lots of Mag 7 earnings. We're going to talk about those companies. Mag 7 looking pretty tough and tired, in my opinion. There's a couple of standouts. We're going to look at that. We had gold pushing fresh highs. And on Friday, we had a bit of a turnaround here on the tariff talk. So we have lots of tariffs being imposed, I believe, this weekend on Canada, Mexico, China, and pretty much everyone, I think, is on that list, frankly. But I think those are the immediate suspects, and the market's certainly backing off and getting a little bit uncertain about where that's going to go. So before we get into this video, we've got our sponsor, Investors Business Daily. Shout out to them, IBD. We've got links in the bottom here. This is two products that they have: their digital subscription, their market surge. You see me post a lot of those charts on X and StockTwits. So check those out and support the show, support IBD with those links. And now let's get into the episode. All right, let's get into it here. We've got some charts in front of us. Warden TC2000, that is the charting platform we're using throughout this video. It's a platform we support here at the Trade Risk as well. Lots of the layouts, indicators, and things you see throughout this video can be downloaded from our website, thetraderisk.com. Check it out if you're interested in learning more. Let's get into the numbers here. So 1 week returns, you can see mostly red. The Dow Jones was really sort of the standout here and finishing in the green on the week, but everything else was down about 1%. You can see that volatility was up across the board as well. Still pretty low, all things considered. VIX at 16.5. And you can see that some of our trends down here are getting a little more turbulent, but still mostly positive across the board. Now, if we take a look at sectors here, you got a pretty divided market this week. You had communication services, you had healthcare and consumer staples really at the top of the list here, but energy got hit hard for the second week in a row, or I guess 2 out of the last 3 weeks anyway, down 4%, still up about 3% over the past month. So it's hanging in there and is a decent performer, but recently still under some pressure, along with technology, along with utilities. If we take a look at our sector trends here, so You got a little bit of turbulence, that has sort of stepped in here, but nothing too dramatic. You can see that our technology XLK Spider ETF is, kind of struggling right now. Haven't really got a fresh sell signal, but it's certainly in kind of a messy spot right now. You can see that financials continue to be very strong in this market. Industrials, very strong, thanks there to the Dow Jones outperformance. Discretionary's working. So we still have, for the most part, a pretty good uptrend breadth hanging in there. The average stock doing better right now. And that makes sense considering the fact that, we did see a nice recovery throughout most of the week and, a give back on Friday. And we're going to get into that here in just a second. So speaking of market breadth, if we go underneath the hood here and we take a look at 52-week highs and lows, you can see that we're still kind of in a very muted territory here. We're not really seeing a dominant winner right now in the number of stocks hitting highs, the number of stocks hitting 52-week lows. You can see that it's pretty dull, all things considered. You give a slight edge to the buyers, of course, here because there have been more stocks making 52-week highs over the past couple weeks, but it's not by any expanding amount or dramatic amount over the stocks hitting lows. So we still need to see this improve more. We've talked about this now for the last 2 weeks, 3 weeks. We want to see, basically confirmation here underneath the hood that it's not just the top 10 stocks driving this market up. We want to see more participation. We're getting it in small spurts, but we want to see more of it. That's at least what I want to see. So if we continue down here and we take a look at our macro data, you can see a couple of things. First, dollar index was very strong this week. Again, big rebound there. The dollar was selling off for, a few weeks here, kind of in the short-term downtrend. Well, buyers stepping back in right now. So you can see that that was driving up. And if we look at our treasury yields, you can see that we were down across the board here, but there was a little bit of a reversal on Friday. So on the week, we were down in the 10-year. I think we finished the week around 4.54%, which is good. We want to see treasury yields continue to gradually kind of either move sideways or grind lower. I think that's good generally for equities. And so right now, I guess, we should be happy, but we're going to look at that in just a little bit because it looks like dip buyers kind of want to get in there for next week. If we take a look at commodities here, silver and gold, big standout winners here, up 2% and 1%. Copper, oil, Bitcoin, all down on the week. So let's get into the S&P 500. Let's take a look at this weekly chart. First thing I want you to focus on here is the bottom right, and it's the volume coming in. So I'm looking at dollar volume, but if we take a look at the S&P 500, I mean, this was a week to take notice, right? So if we go to the SPY here, I guess not as, let me switch it over, maybe not as dramatic as the SPX was just showing there, and maybe we need to let the end of the day data sort of settle here as I'm recording this directly after the close on Friday. But you can see on the week, again, still an uptick in volume. We can see that we had pretty good range this week. We didn't close at the highs, but dip buyers definitely saved us off of those DeepSeek lows on Monday. And if we look at the setup here now, it's pretty interesting, especially in the short term. I think it speaks to perhaps some volatility, perhaps some uncertainty. Let's take a look at this very cleanly here. We've got highs around 610, and we can see that those highs were, essentially tested or briefly made new highs last Friday when we recorded this video, and then we pulled off a little bit. And of course, this was the big gap down on Monday for the DeepSeek news there. The S&P was down, almost 2% or so at the lows, maybe a little over 2%. And you can see there was a nice recovery, follow through on Tuesday, inside session Wednesday, grinded higher on Thursday. And then Friday, we had this big gap up post earnings from, Microsoft, Apple, and a handful of others. And we started the session off pretty strong, nice gap up. We probed higher, and then towards the end of the session, again, I think when a lot of the tariff headlines were crossing the tape, the market started to wobble a little bit, turn around, and then close on its lows. So in isolation here, I think we've got a couple of things we can hang our hats on. We've got clear resistance here around 610 in the S&P 500. I think that is a very clear line in the sand, breakout level, manage risk level, take hedges off level, right? That could be used for lots of different things, but you got a clear kind of supply area here around 610. And now you've got this turnaround bearish engulfing bar on heavy volume here in the S&P 500. So in isolation, this isn't the best look on Friday's session, right? We had a failed to hold highs, heavy volume, and a turnaround and engulfing Thursday. So we got to be on alert here on Monday. There is a potential kind of breakdown setup. Could this be, a bear flag that basically formed here? We got the gap fill, we shook things up, and now here comes the real painful leg lower next week. Something we need to keep our eyes on. Again, there's no follow through yet. We're just game planning. We're scenario planning. We're not predicting. We're not calling for a big breakdown, but there is at least the setup of that follow through taking us to some dicier lower levels, perhaps re-challenging the lows here from Monday and falling back into this range. Don't forget, there is a gap here that we never filled up from the 15th of January. So that's kind of the bear scenario that might unfold here. If we think about it optimistically, if we don't get an immediate follow through to the downside next week, if we kind of pop back up and we, continue to move sideways here and just probe, between, call it 600 and 610 up against this resistance, and we develop a nice sort of, I guess you could call this a cup and handle type pattern, and we break out into the second week of February, that could be a wonderful setup for new highs and a nice digestion, kind of higher low base that gets set up here in the S&P 500. So it's tough to call any confident shots here. I think the market has lots of cross currents right now. There's some good, there's some bad. Breadth is okay. There is some, general supportive leadership here, but some of those mega cap names don't look so hot. We're going to look at those a little bit later. So that's the way I'm looking at it for the S&P 500. We could easily find ourselves in a big sleepy sideways range here of, call it 6% or 5% for the next couple of weeks here. And maybe that's not the worst thing that could happen. If we take a look at the QQQ, slightly different pattern, but it's kind of the same thing here. We had, again, the tough gap down on Monday, and then we got a pretty similar pattern here all the way to Friday. We filled the gap from Monday, and then we reversed course, heavier volume, engulf Thursday to the downside. Again, you have a pattern that really could just go either way. You've got some nice kind of, higher lows. You've got a little bit of a washout here. So you've got a setup where if we start pushing through, call it 535 or so, the highs from Wednesday, December the 18th, if we can convincingly kind of push over this 537 area in the Qs, then you've got all the, wonderful ingredients and footprints to kind of push higher and continue this trend. But if we stay below, if we turn into a bear flag here, if we start breaking some of the, kind of higher lows and structure in here and we start falling below 510, then things just look a lot more messy and dicier. So let's pay attention to how earnings season is going to continue to develop here. We do have, I believe, Amazon and Google next week. So that's going to drive a lot of the action in the Qs. And then, of course, let's pay attention to what the Fed is saying and how those tariffs play out. If we take a look at the Russell 2000 here, you've got kind of a very prime setup with the consolidation that has taken place over the past 2 weeks now. We spent a lot of time between 225 and 230. And so we should be paying attention. This was the level we were, keying off of for many, many months. And this 225 is pretty important. We're building a big horizontal sideways range here right now. So the way this tips next week, I think you're set up for, either going back up to highs at 240 or you're coming back down to this 215 area. And you've got a breakout setup kind of set up here on Monday's trading. So that's about it. Pretty mixed, but there's a couple of paths there for the short-term price action and some levels that I'd be paying attention to if I was a short-term trader starting next week. Now, if we move into some other markets here, let's talk about gold, because gold had a wonderful week here, up 1.14%, fourth week up in a row, fifth week up in a row. big volume coming through, closing at new highs. You got to love it, right? I mean, this is just such a good spot to be. The trend is still up in basically all time frames. We do still have a position here. We've got kind of a fixed position in our Galahad trading system, so we're continuing to enjoy the move up in gold. Oil, I think, is also at an interesting spot here. You've got a lot of compression. You've got a nice kind of pullback. You've got a nice, work off of the initial leg higher to start the year. Remember in January, those first 2 weeks, oil was just off to the races. So are energy stocks. Well, you're getting your good check back right now, and it's coming at a perfect spot. So if you're thinking about being bullish on energy, I mean, this is it. And you had a nice uptick on Friday. So if you get follow through up here in USO, then that probably translates to XLE outperformance as well. So you can certainly keep an eye on that. Nice setup there going into the weekend. So I think that's kind of everything I wanted to talk about. Oh, actually, no, I wanted to talk about interest rates real quick. So IEF is the 10-year treasury bond. And this is looking pretty weak here. So we talked about rates being about 4.5%. Again, I don't know why I'm doing so many triangles. I don't usually like my diagonal lines too much, but I'm putting a lot of them on today. So you can see that the IEF is kind of setting up in this potential kind of wedge bear flag situation. It's been in a downtrend since September of this past year of 2024. And we recently got a nice rally off the lows, but don't forget, we are in a long-term downtrend. We do have some inflationary problems, and we need to just keep an eye out here on these interest rates. So this is really kind of the other side of the coin here, right? If you want to really determine what's going to happen in the Qs and whether or not the SPY can kind of hang in here and not turn into a bear flag, or whether or not in what direction the IWM is going to resolve, well, my guess is it's going to be really driven by IEF next week. And if you see the IEF start to roll over here and break down, then that's probably going to be your first clue that stocks are going to be under pressure. So I'd keep a pretty close watch on this. IEF is kind of sitting at a very, kind of tough spot here, and we'll see if dip buyers can continue to support that. Again, that is what we want to see. We want to see lower interest rates if we want to continue to be as bullish as we can be on lots of these risk assets. So let's continue to move along here. I want to hit some individual stocks. Let's go to our large cap screen. Actually, no, I've got the tickers on the side here. So a couple of big standouts. Some of these related to earnings. Royal Caribbean here, did turn around on Friday, so down 2.98%. But take a look at this weekly chart. I mean, one of the heaviest volume traded weeks here, breaking out to new highs. Certainly no bear market here in RCL. You also had Team this week. Take a look at the volume traded this week for Atlassian. Again, this is one of those potential beneficiaries to this DeepSeek type lowering the cost of the base layer of AI. Team is in a direct spot to sort of benefit from that. IBM also having a big week this week. Take a look at the volume coming in, breakout week, new highs, and certainly has been dead money really since, decades. It might be a dividend paid here that is not being reflected in this price chart, but IBM really coming alive now, catching its momentum. Starbucks had another good earnings here as well, or I actually don't think the earnings were that good, but there's maybe some hopium there with the new CEO. And now let's move into NVIDIA and some of the Mag 7. So NVIDIA looks pretty terrible right now from a price action perspective. It's gapped down on Monday. The dip buyers did not really come in and save it. I mean, they did for a day, but it's chopped around now, and we've got this kind of coiled spring here into next week. And so this one's going to be interesting. You got a lot of kind of overhead supply now. You're below 141. Just doesn't look good to me, or just looks stagnant at best. It seems perhaps like we're just ready to chop. There is certainly some moves that would likely come next week with this pent-up short-term consolidation that's just gone nowhere for the whole week. But look at the weekly volume here. That's pretty epic. $316 billion traded in NVIDIA this week. That is just tremendous of a number. And I think the price action looks rough. So Earnings to be, still need to come here on this one, but they're not here yet. Let's look at Tesla. Did report earnings. It's not a terrible look here. I mean, this is the weekly chart. Really just looks like it's kind of consolidating from the big move it had post-election. I don't have a position in it. I'm mildly interested in potentially getting involved in it, but it's kind of just moving sideways here. I'm just letting it do its thing, and we'll see if it sets up in the next week or two. Google, I think, is your best looking Mag 7 stock right now. It closed at all-time highs, so I mean, I guess that's an easy call, but it's really been kind of consolidating sideways with an upwards drift here. It hasn't reported earnings, so this could all change next week after it reports on I think Thursday or Wednesday. So keep an eye on earnings, but Google is really setting itself apart from the rest of the Mag 7 stocks. Take a look at Apple here. So they reported earnings. Again, that's partly the way the market, really traded this week, was a nice gap up in Apple, and then it just faded throughout the day. Heavy volume. This looks pretty weak. This looks like it could be a lower high here. So again, Apple, don't love the technical look there. And if we just finish off our Mag 7 list, then we can see that Microsoft also had earnings this week. And this chart's not looking so hot either. You can see it's just been dead money now for basically 13 months, and it's looking like it's vulnerable here on the lower side. I think Meta is still interesting. It just looks perhaps a little tired based on its run. It is at all-time highs, so it can't knock it, but it's certainly stretched and just feels like there's some thin air below that stock. So that's kind of the roundup there on the Mag 7. I'd say it's probably the worst looking that they've looked in as a collective group in some time. And we'll see if they just need more time or if dip buyers step right up aggressively and support these trends like they have been for the past many years. So last but not least, let's take a quick tour at the 3 trading systems that we deploy here at the Trade Risk, all swing trading systems. We've got lots of information on our website. You can learn more about how they operate. But this week, we actually had 12 buys and 3 sells across the trading systems. Most of those buys actually was our short-term trading system on Monday. We were very fortunate to have short exposure, being net short the market last weekend into Monday. And so we were able to clean up and cover up a lot of those shorts to buy back stocks on Monday. So that certainly helped when we came into the week. That was really the driving force behind those buys. If we take a look at our risk exposure across these 3 trading models into next week or into the weekend here, we've got a pretty interesting development. We've got our long-term system here, Galahad, still grossed up, very long the market. Our medium-term swing trading system grossed up, very long the market still. But our short-term system is basically all cash here. It's got one position on here. It's 12.5% invested. It's very defensive right now. So that's kind of interesting the way they're all working together. Our short-term model really doesn't see too much, opportunity on the long side or the short side, and it's just a lot of cash right now. And in fact, if you look back at our analysis here on where equity markets are in the short term, that really does jive and sort of makes me feel good that we're pretty defensive in that short-term model. If we take a look at the performance across these 3 trading systems versus the S&P 500, you can see the bulk of our relative outperformance this week was on Monday. And again, that was because our short-term model came into the market net short, had a big gap down, was able to, really catch a lot of relative outperformance. You can see each individual day on how we performed. The aggregate portfolio up 0.4% this week. S&P 500 was down 1%. So this is our snapshot of our trades. You've got lots more information about all of these trading systems on our website, so you can check it out there at thetraderist.com. And with that, we are done. Thanks so much for tuning in. Hopefully this video was helpful for you. And don't forget, we've got links in the description of this show for our sponsor, for our trading systems, for our Warden TC2000 products. Have a great weekend. We hope to see you back here next Friday. Take care.